What's up, mother truckers? You are now watching the Asian My Show live.
What's going on, mother truckers? Welcome to the Asian My Show. I'm here with my guest again, David. How are you doing today, sir?
I'm doing good, Alex. How are you?
Hey, I'm doing good. I'm just so appreciative that you could be on and hopefully answer some questions for some truck drivers. Today, we are doing something different. Last time we did kind of a pre-recorded. Today, we're just doing a straight live. So if anyone has any questions for David, we could kind of get into that and we could just let people know what they could do, because let's be honest, the word IRS already is scary for anybody. So for us truck drivers, there's a lot of intelligent ones out there. I would think that I am one of them, and I still don't understand everything when it does to taxes, right? So that's why we have you here today. So first off, for people that don't know who you are, can you just let people know who you are real quick and your expertise, and and definitely shout out your website if anyone wants to reach out to you as well.
Sure, I'm David Dilley, and I'm a CPA in Jackson, Ohio. Our website is www.truckerstaxreturns.com. And I specialize in tax returns for owner-operators and small trucking companies. I have about 19 or 20 years experience helping owner-operators.
No, that's a beautiful thing. That's a beautiful thing. So, before the question starts coming in, let's talk about some of the differences, because I got some people that said, look, why should an owner operator use a CPA that specializes in trucking when I myself can just go to like H&R Block and for $40 or do QuickBooks or something like that, or TurboTax for myself. We're not here to sell your business here, but what are the biggest difference in compared to what you do specifically and what those companies do?
Well, first of all, H&R Block doesn't charge $40. They might charge $40 for someone with one W-2. They charge a lot more than that. In a lot of cases, they charge more than I do. I did a local tax return yesterday for about 20% less than what they charge and did a better job on it. So expertise is really the question. If they charge $300 and I charge $500, for example, or $600 double, the question is, am I worth an extra few $100? Or is any CPA or experienced tax professional worth a few $100 more? I think the answer is yes. One small deduction being missed can cost you more than that. One credit being missed for something to do with trucking, off-road fuel tax, for example, that H&R Block doesn't even know exists, will cost you more than that. So as you said, the question isn't, do I have to use David? But you need to use a quality tax preparer. There are some people who aren't CPAs who do a very good job too. But I know tax, and I know trucking, and I know owner operators, and I don't think that we charge that much more than anyone else.
Really? So that is outstanding, actually. I was going to think that you were going to be more expensive than someone from H&R Block. I just threw out $40 just to throw out a number. I know it's not that cheap,
Sure.
but so at times you might be able to do something for a single owner operator that might be more affordable than other corporations out there. That's amazing, David.
Sometimes it depends on who you go to. Sometimes other preparers don't help you organize your documents. And so you send them a mess, and then they charge you to clean up the mess. Or I help people up front clean the mess up. When it comes to me to organize, I'm not getting paid to sort through a garbage bag of receipts or 60 emails where they sent me receipts. I'm focusing on helping them save money on their taxes. I can help with the other two. We're trying to help people save money on taxes.
Wait up. So is that a power tip right there, David? Honestly, like if I want to save a little bit of money with my CPA, then come organized, have everything in a spreadsheet, what have you, or all the receipts ready to go? Or what would you say exactly?
If owner operators ask about bookkeeping, and I say I would love to charge you to do your bookkeeping, but you can do it very simply on paper. Okay, I like this work, but here's what you can do. You have a folder, you put fuel receipts in it. You have another folder with insurance, you put insurance receipts in it. You have another folder for fuel. And you keep all your receipts that way. It could be so simple as at the end of the year, you get each folder out, add up everything in it, and write the number on the outside of the folder. Fuel for the year was 50,000. Insurance, for a guy I did yesterday, was 30,000. Other people, it's less. Repair and maintenance is $10,545. Whatever it is. And then if you just write those numbers on a 1 or 2 pieces of paper and send them to me, you've done some time-consuming work for me. All I'm focused on now is helping you best write off your truck and find the deductions and credits that you need. We use a worksheet, and other people might too, that lists out all the different categories of expenses for an owner-operator, because many don't know. They don't know either how to break them out, or they don't know what's deductible or not. So we put a list together. It's about 2 pages. Not everyone applies to every truck driver.
No, I get you. No, I appreciate that. So yeah, let's jump into it a little bit. Hey, all you mother truckers out there, I'm reading one comment, and it's no disrespect to you, David. They're just saying if you could speak a little bit louder. Maybe they have their truck on. I'm not sure, but you know.
Oh, no problem. I'll try.
Yeah. No worries.
I have these earbuds in. I can't tell if I'm screaming or not screaming.
You could go ahead and scream. It's okay. They just really want this information. So they're, it's one of those things where everyone wants to stay out of jail. So we're listening as intently as we can for this. But, let's go into a little bit of the misconceptions, because I saw from the other video we did that there were some things that I guess some truckers wrote and commented that off camera you said that actually are not correct, right?
A couple, yes.
And we're not here to dog anybody out or be disrespectful, but facts are facts. We're here to help and get it right. So can you kind of myth buster some of those for us?
Well, there was one I saw this morning I was looking at, and he was discussing the weight limit of 6,000 pounds. So there is a rule about vehicles that are 6,000 pounds. If they're above 6,000, there's a different write-off rule, which is better, more liberal, and you can basically write the thing off. Under 6,000 pounds for a passenger vehicle has a more restricted depreciation write-off rule because they know you're using it for personal use too. But several years ago, I think it was 15 or 20 years ago, or 10 or 15 years ago, it was back in the early mid-2000s, the rule was if it's over 6,000 pounds, you can write more of it off. But that doesn't apply to a semi-truck, because a semi-truck is a piece of equipment. It has its own rule. A semi-truck is written off over 3 years. That's what the IRS requires. That's what it has to be. So that they were talking about Section 179 and how to write one off, but they were mixing together the rules for equipment with the rules for passenger vehicle.
Wow. Okay. Because I think I've heard of that rule as well. So no, thanks for putting that in black and white for us. Was there anything else that you read on the comments that you would just kind of like to clear up for other truckers out there?
Well, they sure did like the fact that you were trying to help them deduct their chrome. So I think that's good. Nothing specific comes to mind right now. There is a lot of, I think, need for clarification and just organization for people, how to get organized, how to send things to your accountant, your tax preparer. So we touched on that earlier. And I have seen tax preparers write off semi-trucks as if they were a personal vehicle and use standard mileage rate. I think a couple of people might have commented on that. Or they were hitting in that direction, whether they really knew what they were saying for sure. But you do not do that. Trucks are equipment. They are not vehicles. They are not passenger vehicles. They have different rules.
And we do have a question right here from Billy Figs. He says, as an owner-operator, I'm operating as a single-member LLC. What's the best way to file my taxes without penalties and still get a modest return? Because I file online with TurboTax and always owe money.
So to get a modest return, I have no idea because I don't know his marital status, how many kids he has, how old they are they in college? Does his wife work? Is he married? If he is, does she work Does she have too much taken out, not enough taken out? This goes back to the question of what percentage do I take out?
Mm.
And the answer is you can't use a percentage. That was one question on the comments you asked me about a moment ago. Someone says 25%. I think it's different for everybody. And the year you buy your truck, you get more write-off. The second year, you might get a good bit of write-off. The third year, you might get very little from depreciation. It depends on where you are in that spectrum. So, sole member LLC
Hmm.
does their taxes, can do their taxes 3 different ways. And so, to answer that question, we can spend about the next 20 minutes. Let's just say this 2 words, it depends. But a sole member LLC can be a sole proprietorship and use Schedule C. They can be an S Corp or a C Corp.
Oh, he says
And
single,
there's
no
just a lot of
kids,
varying factors
David.
in there. The main single, no kids, get married and have a lot of kids, a lot of write-offs. I have one, a handful of there's some Amish people here who have 10, 11, and 12 kids, and they pay little tax. Let's just say they pay no tax. But again, it used to be I'd tell a guy if you were single, you made $40,000, you could pay up to $10,000 in tax. That's $40,000 after write-off. Got to remember that write-off can fluctuate a lot with the depreciation. One year he may pay 10, one year he may pay 5 or 3. In the first year you buy a truck, you can write a lot more of it off. And so the answer is it depends. I know people want to hear a solid, straight answer, and there isn't one.
No, I get it. So I
But
read
the
between
answer
the
is real
lines.
simple. You have
Oh,
to
go
get all
ahead.
your deductions. You have to get all your deductions. What are they? Well, I have a list, and you can read, but as we said the other day, if it's required to run your business, it's probably deductible. And so, some guys pay tax every year, and they're happy because it's cheaper than going out and buying a new truck every 3 or 4 years, and they work on it themselves, and they're happy. The next guy trades us in every 400,000 miles, 500,000 miles. So it's just going to be really different.
So, okay, David. So we'll just say this about Billy. For one, you don't have kids, so get yourself some kids, and then you can write off a little bit more taxes. But for two, is there a chance, David, that he is not correctly writing off everything, and there are some more deductions that someone like yourself might be able to find?
There is. I think he said he's doing it himself on TurboTax, right?
Correct.
Yeah, okay. So, I don't want to tell Billy he didn't do his taxes right because I've not seen his taxes. There are a number of things that people who do one tax return per year don't understand. Again, the write-off of the truck. Per diem. Did he deduct per diem? Did he deduct his days out at the right dollar amount? Because it's different for trucking than it is, for example, me as a business person. And he can deduct 80% where I deduct 50%. Did he use the right daily amount? Did he use 50% or 80%? If he's subject to the hours of service rules, he uses 80%. I'm just not a trucking business. I can use 50%.
Mm.
And then does he know he can write off other things? And did the 1099, does he factor? Did the 1099 include factor fees or not? I see it both ways. If it was a gross number, did he remember to deduct the factor fees? I don't know. There are some examples.
No, thank you. And leading to that, another owner operator is asking, David, when you are an owner operator, what can't you write off? So, are there a few top things that you can't write off the bat?
Well, there's always something you can't write off, but let's just say, obviously, the truck, the fuel, everything required to put the truck down the road. If the shippers and delivery people require steel toe boots, I deduct them. You may buy reflective shirts and hats, deductible. One person commented the other day that, what about uniforms? I would say if you have a uniform, it's deductible. If you have some hats made with your name on it, and you pass them out to the guard shacks where you drop off, I've always deducted those. It's kind of advertising. You can deduct off a room in your home if you qualify. There's a few rules there. You have to use that room exclusively for the business. You can't use it for anything else. can't have a TV in it for personal use. You can deduct miles for your personal vehicle driven for the business. So if you come home on the weekend and you jump in your truck and you drive to town and you buy some parts to take back to work on it, or you go see the lawyer, the insurance person, or the CPA, those miles are deductible. A lot of people miss those.
Hmm. So
Some people
what's the
want to buy
main
a
thing?
vehicle, right off the whole vehicle.
No, go ahead, David.
Good.
What is the biggest thing that people probably can't deduct that you've seen that they're always trying to deduct? Is there anything that comes to mind?
One thing I've seen a few of, they'll just try to deduct way too much of their home. I had one person one time that came in and the previous preparer wrote off all the utilities, 100%. All the utilities, the rent, insurance if they had some, or a garage, and so on. And so you can deduct a limited amount for that. I had a guy get audited a year ago that went to another tax preparer, and then he came to me, and they wrote off all of his interest on his home, $5,000 or $6,000. He had a room in the home. He could write off a percentage of that. You can do percentages. You can't do the whole house, the garage, the pool. You can't write off all the cars. I had a guy write off a bass boat one time in a trucking business the year before they came to me, and I said, you know what? We just can't write off bass boats in trucking businesses. And
Oh
she did
man.
not understand that. And she gave me a real funny look. I said, the husband wasn't there. I said, do you think you want to go home and talk to your husband before I do your return? Because it's going to be drastically different than last year. She said, I think I will. She never came back. I went back to the other person. So, I don't know what to tell you. There
Oh
are
man,
limits.
there are
Bass
limits.
boats don't help a truck down the road.
Oh man, that's funny. Well, we have another owner operator that says, "Can I deduct hotels outside of the country?"
Deduct what?
Can I deduct hotels outside of the country?
I don't see why not. If you're driving into Canada or Mexico and you use a hotel and it's important, necessary, I don't see why you can't. So there is an old IRS rule that I do not know if they enforce or not. If you have a sleeper, they don't really want you deducting hotel costs. I don't know if it's a rule or if it's just a kind of a general rule among auditors that they question it. I wouldn't deduct a whole lot of hotels if I have a sleeper. I think they would look for that. But occasionally, I see no problem. And maybe you're required to stay in a hotel because you're going to be down for a few days, whatever that you're doing. So yeah.
Oh no, thank you. Someone wrote something funny. So they said, "Wait up, David. Why can't you write off a bass boat if you use it to take your clients fishing?"
He didn't take his clients fishing. He was trying to enter tournaments and things like that. So I suppose the IRS might say that's a little unusual. And what was the client's name? What day did you go? Who do they work for? And they would begin asking some questions. So most people in trucking, you're under dispatch. You're getting loads brokered to you, or you're finding your own. You do a lot of different loads. But if you do spend some money on a client, I do believe it's deductible. Dinner, if you were to go see somebody, you know, it's okay to patronize and deduct some of that. I would still leave the bass boat out.
Oh, I love it.
For sure. For sure.
Oh no, I love it. I love it. So, when do you recommend? This is just a question I had for myself. When do you recommend, David, that I actually start using someone to start doing bookkeeping for my trucking business? Do you think someone can handle that if they just have one or two trucks, or when is it a good time that you see things start getting kind of cluttered for trucking businesses?
It can depend on the person, but a general rule is when you get to three, 4, or 5 trucks, you're at a point where if you're driving a truck and you buy one, you're fine. You buy the third one, you're probably okay. When you get closer to 5, I think you'll find yourself unable to drive and manage the other four. And I would think that the bookkeeping would be similar. The moment you go on payroll, if you have more than one truck and someone is a W-2 employee, you immediately need help with payroll. I do not recommend owner-operators or any business do their own payroll. The bookkeeping, maybe they can handle the bookkeeping for a while. Depends on their devotion to it. They really love the bookkeeping. They've got some experience in it. They'll go further. But I mean, if you don't know how much is coming in and going out on a weekly basis, you've probably passed the point where you need someone to help you.
Gotcha. Okay.
Do you want to spend your time bookkeeping, or do you want to spend your time managing your company, finding new customers, patronizing customers, and so on?
No, that's great. Jamie has a great question. David, do you see clients virtually, or is it mostly a phone call stuff?
We usually do phone calls and emails. I'm not as technologically advanced maybe as I could be, but if someone wanted to see me online or we could figure that out, do it for sure. Absolutely.
Cool. And I'm just letting you guys know
who can help me with all that.
Yeah. Oh, definitely. And I'm just going to let all the subscribers know that when you guys jump on this live, I beg David, if, some of these tax questions are very personal, and I understand when it comes to this, it's very personal. So I did put down his website, and if you call him from the show, he's willing to give you some free advice, free of charge. I mean, David and I are just out here to help people. Yes, he has a business, and yes, we are all trying to make a living doing honest work. But, if you have a quick question, the last thing we want is for you to do something and it costs you later. So, David does not mind asking questions. I have it pinned. Was it www.truckerstaxreturns.com, right? I have it pinned in the.
Yes, sir.
Okay, great. See, I'm helping you out. No, of course. If you're willing to help out my subscribers, I have, that's the biggest testament to me, So
yeah.
I appreciate you for that. Let's see. Oh, here's a good question. You kind of brought this up the other day. I know you're running out of time. We probably have about 15, 20 minutes max left, because I know you have a lot of things you need to do. But keep on trucking ass. What can you write off as far as can you write off your truck value if you buy a new truck or lease truck?
So he says the value. In accounting, what we write off is what we pay for something. So if you pay $50,000 for a truck, you write off $50,000. If you write a check for it, you have a $50,000 deduction. If you borrow money at a bank to buy it, then you have a $50,000 deduction plus the interest you repay at the bank. If you enter into an equipment leasing arrangement with one of the equipment lease companies around the country, and some are better than others, by the way, then they don't really spell out the interest. You either got to break it out yourself, an amortization schedule. But the bottom line is the cost of the truck gets written off. If you're truly renting a truck you can walk away from at any moment, that's rent, and you only deduct the weekly rent payments. I see very little of that. I see a lot of people who think they're renting, but in substance, they're buying a truck through a lease agreement. What the IRS says is, what is the substance? They may call it rent, you may call it a lease, you can call it whatever you want. If in substance you're buying a truck, there could be a 10% balloon payment at the end. That's buying a truck. It could be if you pay $100,000 for a truck, and at the end of your term it's worth $50,000, but you can buy it for $10 or $20,000. Let's call it a bargain purchase option. It's the same thing as buying a truck with a balloon at the end. And so we write off and depreciate the cost of the truck plus interest.
No, that's very helpful. If you guys didn't understand that, please on the replay, pause it and listen to it again, because I think that's going to help a lot of people out. We have Woo Too Much says, is it always best policy to pay quarterly as an owner operator? I know we touched on this a little bit the other day in our segment, David, but what are your professional thoughts on this?
Well, my professional thoughts are that you're required to pay quarterly and you should pay quarterly. My common sense thoughts are this. You got to know what you're going to owe. So first question, how much will I owe? You can't do it based on a percentage. We said that earlier. If you're going to, I had a guy one time that $5,000. I said, next year you probably owe about $5,000 again. When do I pay? Well, it's due April 15th next year, but you're required to pay quarterly. Well, how do I do that? And he was questioning how to save the money up. And so I said, look, if you just take 5,000 and divide it by the 52 weeks of the year, it's about $100 a week. You can pay the IRS $100 a week. At the end of the year, your 5,000 is paid in. If you don't meet the quarterly deadlines, they can penalize you a little bit. If you don't meet the April 15th deadline, they penalize you a lot more. But if you want a budget, you can pay it every month, you can pay it every week, you can pay it every day. You can just say, well, I don't do much in the winter, I'll pay double in the summer. And honestly, if you miss those quarterly deadlines, but you're paying all your money in, the penalties that you rack up are very small. Let's say
How
you
big
missed
are
the
they?
April 15th deadline. Well, it's hard to calculate without seeing what someone might owe in the past history because there's rules about the previous year that impact the current year. But basically, I would just say it's not a lot. If you owe $10,000 and you miss the April 15th deadline, let's just ballpark, you could be in a $400-$600 penalty.
Mm.
If you miss the quarterly deadlines, let's just say for the year, it could be $100, $200. It's not a lot. Missing the April 15th deadline for paying is expensive. If you don't file on time, it's a lot worse. It's 25%. So if you have $10,000, you don't file by April 15th and don't get an extension. First of all,
$2,500.
that's just for the filing late. Then you get the paying late on top of that. Then the quarterly on top of that. Then the interest for the paying late on top of that. Then the interest for the quarterly on top of that. And it begins to rack up. This is why I say get someone to help you find out about what you'll owe and get it in. And if you can't do it by quarterly deadline, I would not worry. I wouldn't stay up all night. Don't let it ruin your lunch. I wouldn't miss the April 15th. No one wants to pay a penalty, but a lot of people don't pay quarterly and they just don't worry about it. I'm not suggesting that. I'm just putting it in context.
No, that's great. That's great. Here's a interesting question. And again, David, thank you so much for answering these personal questions because we're all trying to always save money. So we're trying to do these taxes ourselves sometimes as a one truck owner operator. And so it's Miguel has a question. Says, I own a semi truck and trailer. If I wanted to purchase a small trailer for my pickup truck, can I put it in the company name and deduct it, even though it wouldn't be a semi truck trailer?
The question is this being used for the business? If the answer is yes, then you can deduct it. If the answer is about half the time I use it for the business, the other half the time I pick up firewood for the house, or we put the bicycles in it, or we put the motorcycles, the four-wheelers in it when we go hunting or whatever we do, then the answer is you can deduct 50%. But the question isn't whose name is it in. The question is it used for the business or not? Or how much is it used? Does that make sense? Are you there, Alex? I can't hear you. Alex, I can't hear you anymore.
Can you guys hear me now? Tell me if you can hear me now. Thumbs up, thumbs down. Thumbs up, thumbs down.
Hey, Alex, are you there now?
Yeah. I think I got a phone call and then
Oh my.
it mutes it. So I apologize about that. If you get a phone call, just jump back out and jump back in, David. Okay.
Okay, thanks.
Okay. So my question is there a rule as far as just say that trailer example? If I use it 50%, 80% of the time for business, 20% for personal, can I write it off? Or does it have to be 100% used for your business?
Are we talking about a $2,000 or $3,000 trailer?
Does it make
I
a difference
guess.
in price? Yeah, I'm not quite sure.
Well,
Does it make a difference with price?
well, let me say this. There's a rule that when you go over 50% use, that something maybe, and that's more for vehicles. Let's just say this. In general, if you spend $5,000 on a trailer that you use 80% for business, you can write off $4,000.
Mm,
There could be some
okay.
complications, but basically.
Okay. So we'll just say 80% is a good rule. But for the most part, people, if you're using it for your business, write it off for your business. If you're using it for pleasure, just don't risk it. Correct?
That's correct. The same concept goes for your vehicle. If you write off part of your vehicle, like we talked earlier, you have to track your mileage, and that's how you do that too. That's how you demonstrate to the IRS business versus personal. The home, same concept. I have a 1,000 square foot house with a room that's 10 by 10, 100 square feet. I write off 10% of the home, utilities, trash, water, etc., insurance, and so on. So in tax, if it's for the business, you write it off. It's okay to have some mixed use items.
Got it. So Chitty Chitty Bang Bang has a question for you. As an owner operator, can I write off the purchase of my farm animals? I got 2 pigs and 3 cows.
Well, that constitutes a farm, and that would go on Schedule F, not Schedule C. And so if he's making money on the side like that, he raises some animals, sells them, he can report the income and record the write-offs. But no, I would not mix that in with the trucking business.
No, that's great because I was gonna get some farm animals right now if you were gonna say yes.
Let's go buy a bunch of goats.
Let's do it.
No more grass mowing. Buy goats.
I know, right? Let me see. Let me read this correctly. JJ asks, how many Flying J wiener roller receipts will the IRS accept? I think he's being a little funny here, but the man eats a lot of hot dogs. So will they accept all of them? He's eating like 20 a day, David.
Well, if you're doing per diem, your max per day is $66. Okay. How many hot dogs does the man eat?
Oh,
Tell me
I love
this. How expensive are they?
No, let's just stay there. They're usually 3 for 2. That's usually what or two for 3. 2 for 3. 2 hot dogs
If
for
he's eating
$3.
so many hot dogs, he's gonna write off the actual cost of the meal instead of the per diem. He's gonna get a doctor. He's in trouble. He needs some help.
Oh man, I love the funny side of you coming out, David, because people in the other comments they were so funny. They said, "Now that's a man I want to do my taxes. Well tempered."
Thank you.
Oh, that's great. That's great. Let me plug in my.
But you can save the receipts.
Go ahead.
If you're deducting the actual cost or per diem, you can save your receipts to verify that you were out away from home, of course.
That could be very helpful, right? course, you know me, I never want to charge my computer or anything, you
Oh
know.
my.
So, you know. Okay, no, we're good to go. We're good to go. Okay, so no, but with all this now, oh, here's a question I had for you. This is like a personal question I have. So, is there for a single owner operator, right, David? Is there an amount of money gross that I should stay under? Like, if I'm making like $500,000 gross a year, should I work less? Would I be saving more money if I just made like 450,000? You know, is there a bracket for owner operators that you see? That's a good common ground.
I get that question all the time. The more money you make, the more money you make. So if you're making so much money and you're working too much and you rather have more time home or more time on the bass boat, um, you can work less. But when you're making money, you're making money. The more you make and the higher the bracket, the less you get to keep. But you're still in the some money in the 10% bracket, some in the 12, the 20, and so on. Okay, the more money you make, you get in higher brackets, but it's a diminishing return as you go. But people always say, I wish I'd have made less money. And I think, well, no, that's not right. You have to have a work-life balance, but a business wants to make more money, not less, or it wants to make spend less expenses on the same amount of money, or he wants to work less to make that much money. But I never tell people to make less money.
So make as much gross as you can, as long as your expenditures are lower than what you're actually bringing in, right?
Yeah, yeah.
Uh, I love it. I love it. Tell me how you're doing on time, because I know you're a busy guy. We got 90 people in here asking questions, but you just let me know, because when you got to go, David, you could be honest. We could do these segments anytime, because especially right now with April coming around the corner, you just helping us out. It's very helpful. But you know, a lot of owner operators are going to have a lot of specific questions. So, I mean, do we need to wrap this up in the next 10 minutes or so? That's
Yeah,
fine.
10 minutes. 10 minutes is good. I'm having fun. I like it.
You like, see, you know, the first time you and I talked, you're like, you know, I don't know if I'm a camera guy, but I mean,
I'm
this
not.
is different, right? This is different.
Yeah, it's
I
fun.
mean,
It's fun.
you know, I love it. I love it. Okay, let's see. Let's see. Been off the road. Okay, here's a question from Michael. Here's the question: local driver, been off the road for 2 years. How can I save the most money on federal side?
Save the most money on federal.
Yeah, I guess on the federal tax side. I mean, that's
He
pretty
said,
open ended, but
yeah, he said he was off the road or on the road.
he is off the road for 2 years. So I think he means possibly that he is. Let me see. Let me see what he's writing. He wrote something else, because that's a little confusing, right? We need him to keep on working to pay these taxes. Okay, so I think he's working local now, is what he means. You
Local.
know, yeah, he's
Local.
a local driver now. Yep, for about 2 years now. How can he save the most money on federal side? He's single man, and
Hmm.
so you know, maybe he needs to get a wife and 11 kids. I don't know. What are your thoughts, David?
That'll fix the tax part. He may have other headaches. Is he an owner operator or a company driver? He's owner operator, right?
Let's talk both. Let's just talk both. You know, owner operator first.
Again, there's no magic. You have a truck, you have fuel, you have insurance, you have all these expenses. To make the most money, you make as much as you can, spend as little as you can, and then the difference is going to get taxed. Um, so here are some ways you can save money on taxes while you're local over the road. You can do pre-tax retirement plans. Possibly you could look at health insurance to save a little bit of money. If you're local, you're not doing per diem. If you're an owner operator, local or not, you can set up an S corporation, and there's some money to be saved in an S corporation. because you shield some of your income from Social Security and Medicare tax. So there are things to do, especially if you're an S corporation. You can write per diem checks to yourself. You can really hammer down and decrease how much of your income is subject to Social Security and Medicare. Some people say, well, I want to pay more into Social Security. They say that until I tell them how much they owe. But the more you pay in, the more you'll get when you retire. But maybe you can find a way to pay less there, but then fund your own retirement plan. There are some ideas that are general, whether you're local or not. If you're local, you can't do per diem. Just basically keep track of all your expenses, There are some things you can do in a private conversation that we tailor to you and your needs. But an S corporation will save some money.
Okay. So tell me this then. People that want to become owner operators, right? Do they go the LLC route, the S corp route? I mean, what's the best way to set yourself up? I don't know if that's asking too much for you to give away on this, but it's one of those things where a lot of people are confused. A lot of times people just do straight sole proprietorship because they don't know. What are your thoughts?
Well, the two L's in LLC stand for limited liability. This is a legal question. It's a risk question. Do you want to be an LLC or a corporation and limit your risk, or do you just want to be a sole proprietor and risk everything? I think I just answered that question by saying you want to limit your risk. If you become an LLC, there are 4 ways LLCs can be taxed. So if you're a sole member, there are only 3 ways to be taxed: sole proprietor, S corp, and C corp. Probably sole proprietor or S corp. I saw a company one time go from 2 trucks to 20 trucks as a sole proprietorship, and they never did the S corporation election, and he paid that way than if he had been an S corporation. He was spending massive amounts of money every buying new trucks. So he was writing off all of his income through those 8 or 9 years. So it's not a drop dead answer to be an S corp, but you want to be an LLC. That's a question for you and your attorney and your insurance company on how to limit your risk.
No, I hear you. So it sounds like what I'm hearing. So what I'm hearing is LLC's better. So better. Can you hear me? I was chopping up a little bit. I don't mean to cut you off if I am.
I would definitely be an LLC.
Okay. So
LLC limits your risk.
Okay. No, I appreciate that.
Yeah, LLC. And then you can talk to your tax advisor about the best way to get taxed.
No, I like that. Okay, so if you are a sole proprietorship now, you're taking on a lot of risk, people. So just think about doing LLC. Correct, David?
Yeah. Sole proprietorship refers to the tax status, LLC, the legal. So I would never have a truck or a trailer in my personal name ever.
No, I love it. No,
we get time for about. Go ahead.
No, we're good. We're good.
I think we have
let's do
time and battery for about 1 or 2 more questions.
I got it. So we'll do this last one for fun. Sorry, all you mother truckers out there, if we got a little bad reception as well. It's just that's the life of doing a live stream. So here's a fun one. David, is becoming a CPA really hard?
Unless you're less smarter than me, yes. You have to have, when I took it, a 4-year bachelor degree, then you had to have 2 years work experience, and you had to pass what I think is the world's hardest test. And so I did not pass it the first time. We'll just leave it there. But when I got serious about it and really, really, really studied, on the 3rd time I took it, I passed 3 out of 4 parts, and I got a 73% on the one I failed. I had to have a 75. And so I know people who are just geniuses and passed it easier, but it's a devotion. You have to really work. You have to really work on it.
Oh, I love that. And then I guess my last personal question for you is before we start doing more segments, you know, we gotta learn a little bit about you too, David. So, what are your hobbies, and what do you do for fun? And please don't tell me doing taxes for owner operators.
You read my mind. I like to go outside, hike. There's a local state park I like to hike in. I've taken my son hunting a few times now. We spent 2 weeks in Yellowstone last year. About 3 days to get there and 3 days to get back. And we stayed in the Tetons and we did some hiking, just animal watching. We saw 2 grizzlies and a black bear in 1 week. And I'm very happy about that. I love going out west, seeing the mountains.
Oh, I love it. I love it. You know, so, any plans for the weekend?
Yeah, one. Doing taxes for owner operators. You set yourself up for that. We're working on Saturday and Sunday. I will sleep in a little bit, get up and take the family to church. I'll come back home and I'll rest the afternoon. Maybe take my wife shopping. She says she wants to go somewhere and I have to do it. So I may doze off in the car while she's inside shopping.
Not have to, David. You would love to do it. You would love to do it. Come on now.
Did I say have to do it? Yes. Cannot wait. Cannot wait. Sit in the car with kids. She works for me. She works for me, so she deserves whatever I can help her with too. She's here too.
Oh, I love it. I love it. Well, tell her hello. We got to get her on.
Thank you.
And I appreciate you so much. We're going to do more segments in the descriptions, guys. If you guys want to reach out, David is willing to do some free consultation. You don't have to use his business if you don't want to. We've talked off camera, and there's plenty of people that have asked him questions, and he's never heard back from them, and he's okay with that. So, it's just one of those things where we're here just to try to help people. So go to, truckerstaxreturns.com. Did I get that right?
Truckers with an S, truckerstaxreturns.com.
And you if you're doing your tax yourself and you need to just ask him a quick question, he's more than willing to help. He'll probably be helping you while his wife is shopping.
And if you go somewhere else, you can still print off the list that I have on that website. Use it to get organized and go somewhere else. I don't want you to, but you're sure welcome to. It's out there. It's free. All you have to do is print it off and do what you want with it.
I love that. I don't know if you're trying to impress me, David, but it's working. Let's put it together, a list, and we'll do that as a free list for people. And of course, they have to go to your website to get it. But there's no ties, people. Okay, we just want to make sure that you're good to go and you're happy. If you end up using him, amazing. If not, then take the free advice that we have on our segment, and we're fine with that. But overall, David, we'll probably see you back. When's tax due? April 15th?
Yeah, I've been praying they'll extend the deadline, but they're not going to because of all the problems. They just changed tax law for 2020 this week. I think the president is signing a bill today to change 2020 tax law for unemployment benefits, but they're not going to extend the deadline. So yes, as of now, April 15th. Got to pay by April 15th. You can extend the time to file, not the time to pay.
Okay, on the next episode, we'll jump on, maybe show people how to extend it if they need it. What do you think?
Yes, absolutely. Very easy.
Okay, we'll go through that. Well, thank you so much. Have a great weekend. Have some fun. Buy your wife something nice. Tell her hi. Tell your niece hi. Tell everyone hi. And we'll see you on the next one, brother.
I will, Alex. Thank you.
Yes, sir. Bye.
Bye.
Hey, mother truckers, man. What a great guy. Overall, I know you guys had some more questions. Sorry if you guys thought I was catching them off, but we just had a little delay. So it wasn't that I was trying to cut David off, even though I do talk a lot. But, we're going to do something fun today. Right at the truck stop off here, for some reason, they have a bunch of models doing something out here at the truck stop. So if you guys don't mind, I'll do a fun video for you guys. Don't hate me for it. I think some people enjoy models and trucks, but for the rest, it's okay. I apologize. Overall, we'll do more segments. If you think this is great, I will do more. I just want you guys to be successful and get everything out of trucking that you can. But a part of making money is saving money And the taxes is the craziest part. You don't have to use David. Don't ever think that you have to use anyone that I have on the show. We're just here to give free advice, and that will never, ever, ever, ever change. You know what I'm saying? So I love you all. Thank you, Daniel Garcia. You know, you're one of the man. I'm seeing a couple of you. Games, Zano, Michael, all you guys, Gary Bates. I apologize. We'll get your questions answered on the next one. I love you guys. And let me know, too, if you guys are enjoying the interviews, because I'm trying my best just to give you guys the best information that I can. And so we'll get it more crisp. Maybe I'll get better internet here. And not so much lag, but we're here, people. We're here. We're going to try to do our best, but
What's up, mother truckers? You are now